Today, we're going to talk about how the SEC and the index fund created the trillion-dollar companies that our retirement depends on. If you haven't seen it yet, John Oliver did a great segment on the index fund, essentially arguing that hedge fund managers are kind of like scams, charging you more and giving you less. In today's episode, we're going to start with the Security Exchange Commission, the SEC. Now, the last time you heard about them was probably when they came out and gave Elon Musk a little slap on the wrist for his Twitter fiasco. You kind of wish that they would do it again so you can go in for another quick buy, right? But the reason why you don't hear about the SEC more often is because they're busy keeping businesses honest with a threat of jail time or, even worse, delisting. And believe it or not, getting delisted is one of publicly traded companies' worst nightmares because being listed on a US stock exchange gives you huge advantages, basically huge discounts in being able to exchange your equity for cheap financing. You're able to borrow at such low rates to improve your company. You see, in the world of business, the farther you are ahead, the greater the reward. It's the opposite of Mario Kart. When you're in last place in the business world, you just keep on getting hit by shells and banana peels. So just how big of a difference does it make when you're listed on the US stock exchange? Well, let's take a look at the market cap. The market cap for the US stock exchange is over $30 trillion. The way you get this number is by adding all the shares of all the companies that's listed on the US stock exchange and then multiplying it by how much their shares are worth. So what that number tells you is the price of all the companies that are listed on the US stock exchange. And that number is $30 trillion. But what's notable about that number is its comparison to the market cap of other countries. As you can see, the entire market cap of France is around 2 trillion, Germany 1.7 trillion, all of China around 6 trillion. And what this means is that you can just take $1 trillion company in the US, like Apple, Microsoft, or Amazon, and you can trade them for every single publicly listed company in another country. But that brings us back to the competitive edge of being listed on the US stock exchange. If a company is listed here, the chance of their shares being valued more is much higher than anywhere else in the world. And when your shares are just that much higher, you're able to get equity financing, being able to borrow money for cheap. You're able to take that cheap capital, reinvest it in your company, improve your market share, improve the research and development, and increase that price per earning ratio. And then the market will reward you with a higher price per share. And then the cycle repeats. That's the beauty of the virtuous cycle. And all of this is made possible because of the work done at the Securities and Exchange Commission. The SEC creates a safe environment for venture capitalists and investment firms to invest in the equity market, believing that companies will honestly take their money and reinvest it in their own infrastructure, making the price go up. If there's too much insider trading going on, if there is fraud, if there is Ponzi schemes, then investors will not invest, companies cannot access capital, and then the entire economy will be stagnant. The craziest thing about all of this is the self-fulfilling prophecy. Because of the safe environment that the SEC has created in the past 100 years, venture capital firms continuously invest in US companies or US listed companies and allowing them to grow to the 30 trillion market cap that we see today. Now, it's fair to ask, is it really because of the SEC that the US has 30 trillion in market cap? Or is it because we just have outstanding companies that make a lot of money? Or that we have great venture capital firms and coaches that help these companies become big, right? Well, yes and no. In this series, we're trying to look at competitive edge that the US has. And yes, we have amazing companies like Google that pretty much controls the location and whereabouts of every single person on planet Earth, which is pretty crazy. Each company has their own competitive edge. Think about it in terms of competitive gaming, like the things that Blizzard makes, right? There are amazingly talented esport players, and there's amazing coaches that consistently lead teams to national championships. But isn't the genius the game creators themselves, right? So yes, there are amazing companies and venture capital firms that make the US great, but the genius is the SEC and the business environment that they created where a single company can grow to the size of $2 trillion in market cap, the equivalent of all the other companies in another country combined. But the competitive edge doesn't stop there. You see, when a company is listed on the US stock exchange, then the SEC gets to regulate it, the IRS gets to tax it, and all sorts of other benefits that the US gets. Does that sound familiar to you? Because that's exactly what Apple is doing with the App Store. Maybe they got a sneak peek of the SEC playbook. Apple is being sued because of the alleged monopoly that they have created. Every app, game, software that's sold through the App Store and with their in-game purchases or in-app purchases, Apple will get a tax on that. And Fortnite is really unhappy about that. 30% of all in-app purchases is a huge chunk of that company's revenue. But Apple is saying, no, it's not a monopoly. You can download the app, you can buy the game on your own website or on Android for that matter, right? You don't need to access Apple. But the truth is, if you want access to high quality users, like the people who own Apple products, the people who will be willing to spend on in-app purchases, then you almost have to give Apple a share of your profits. And that's the reason why Apple's worth a couple $1 trillion. The same case can be made against the SEC and the US Stock Exchange. If you are a company and you want access to this cheap capital, well then you will have to pay Uncle Sam a portion of your profits as well. As a US attorney, I've been fortunate enough to help several companies IPO overseas. And because I was a little curious, I asked, why didn't you consider putting your initial public offering here in the US? And one executive straight up told me, that's like asking somebody who just bought a Toyota why they didn't buy a Porsche. You see, being listed on the US Stock Exchange is extremely expensive and laborious because of all the paperwork that's involved, but the reward is great. So we've been talking a lot about the market cap and the SEC and the US company, but let me tell you how the index fund is gonna change up the game. So traditionally, individuals or wealthy individuals will take their money and give it to a hedge fund manager or a mutual fund, and then they will pick and choose which stock you should buy with your money. But if the world begins to move towards index fund investing, individuals around the world will begin to cut out the middleman and directly take their funds and invest in whatever they think is the safest in the long run, right? That's what index fund trading does. We are beginning to see that trend pick up with Robinhood and Vanguard and all the millennial investing. If this trend continues to the rest of the world, let's say Starlink provides internet access to everybody around the world and everybody has a Robinhood account and everybody's invest $1 here or $2 there in the US Stock Exchange, cutting out the middleman, what do you think is going to happen to that $30 trillion market cap? Will it become 50 trillion? Will it become 100 trillion? And what do you think is going to happen to the other market cap at the other stock exchanges? And this is one of those unintended consequences that Freakonomics loves to talk about. And maybe they'll take it up in one of their podcasts one day. So back to the Mario Kart analogy. Companies listed on the US Stock Exchange being able to access cheap capital is like being on the last lap of the race while everybody else is still at the starting line. And then you just got the star and the lightning bolt. That is the competitive edge of the US Stock Exchange. That's what America has created. The point is, index fund trading, and when this expands to the rest of the world, when 7 billion or 8 billion people all begin to do it, it's going to change the world of investment as we know it. Thank you for watching this video. This is the 4th episode in our series, Let's Talk America. If you like what you see, please smash that like button and subscribe because we're releasing 2 new videos every week leading up to the election. So until then, take care, bye-bye. Yes!